Good evening. Ira Epstein with your financial market wrap-up for this Thursday, and we're already at the 20th of January, 2022, getting on to 6:40 p.m. Central Time. Well, last night I thought I was very clear about President Biden. I said, I heard him, but what do you do? What kind of statement was that Russia can go in and it's a small incursion? Well, I'm not the only one that heard it. It took up today the national waves, I'm talking news, everywhere. How could you make that statement? First of all, I don't think he's capable of talking 2 hours and holding a news conference without making a flub. I don't think anybody can do that. Too long. This is not Putin land where he goes on for 8 hours and does it. You should have more regular news conferences, deal with things instead of trying to do that. But he's so far behind in the polls, he's trying to do everything. And this is not negative Democrat or Republican. I want to remind everybody, he has stepped into the Trump shoes of a year ago. The two of them, the ratings came out for the year. The only president worse than him is Trump. You know that, 39% versus 43%. They're one and the same, in the sense that they can't get things done. Congress doesn't work with either of them. It's a shame, but it's the way it is right now, and I don't see any of this changing, even if the Republicans get control of the House and the Senate at the midterm. It doesn't matter, just the way these things go. We're a country that doesn't work too well, unfortunately, in terms of our politicians. I want to make that very clear. I think we work real well as a country. All right. So we're starting to get a correction in the energies, and the question is, how deep does it want to go? The market's been up every day. Nothing grows to the sky. Nothing. So it's overdue. Everybody's saying it's a guarantee we're going to a $90 or $100 crude. Nothing's a guarantee. I've done this long enough to see it. We're starting to get a correction in the bonds and notes. I don't know where that's coming from, but the market's starting to move up here. In the stock market, the big battle that's been going on, and you know what it is it buy the dip or is it sell the rally? Which one of the two? Right now, it seems to be you sell the rally. It can change like that, but that seems to be. The pattern each morning is in the stock indices, you start off, and before you know it, by 10 o'clock, we're roaring to the upside, or 11 o'clock. And then late in the afternoon, for whatever reason, it starts, and the whole bottom comes out of it, right? That's what's been happening. A couple of days doesn't make a trend, but it's a difference. The market's not bouncing away from lower Bollinger Bands and key moving averages. Pay attention. That gets a little scary. So there seems to be a change in the feel of the market. You see this change right here on the weekly chart. Instead of getting under it a little bit like you did back here or here, we're now getting under it by a lot. Now, the week's not over. A big rally tomorrow can change all that because it'll look at the settlement. But I'm paying attention. And as a chartist, you're always looking. Did something change? Let's go. Look at the thrust to the downside. Okay, where's the next support? It's back here in this trenching, right? We've just gotten through that. So that's your next trench from 44 to 4,300. The market's in a downtrend, lower highs, lower lows, nothing new there. It's been doing that. It failed. I'll come back here a little bit. It got down here to the 100. Here, it started failing through it. This morning, you went right back and you were fighting over that number, and then it let go. So that means 4406. We just looked at the 4400 level as the top of a trench where support begins. That could be where that next support ladder comes in. The Bollinger Band is not supporting the market. The market's running on it. It's become what we call a gorilla glue trade. You hit the band. Watch. You hit the band. You probably hit the band again today. That's the gorilla glue. You've locked on. Until it breaks away from it, I don't know where that'll be, other than you guess, the 200-day average is a big moving average. I would think that'll offer some level of support. But there's nothing bullish other than that's what you're looking for. And when you add the momentum, it's down. It's oversold. That gives me thinking, you could get a breather for the weekend, whatever. But there's nothing I'm looking on that tells me suddenly, you should be a buyer there. Same in the NASDAQ. The NASDAQ's not even paying attention to the 200-day average. That's got my attention. So as a chartist, you're looking for events that you haven't seen recently, and you say, what is causing it? Fed, Fed, Fed. Can I make it any clearer? It's not Omicron. It's the Fed. The Omicron is getting better, not worse. We're talking peaks, not going up to peaks. There's a difference there. And there's not a new variant that they're saying all of a sudden get scared about. More people getting vaccinated. You've got more things happening, and that's the good thing. The bad is the market has to adjust now to what is going on with the new Fed that we have. Take a look at the Dow. Same thing. So that's where all my thinking goes on this. The Russell, it's been a disaster. You had this one opportunity to be good, it failed, and it's been miserable. So all the stock indices are under heavy selling pressure, and you don't want to be a bottom picker. It makes no sense. It's easier to be the top picker. The trend's down. Got that? Pay attention. In the VIX, you're not making that run here. That's another problem in the market. Now, I don't think you'll stay over the Bollinger Band very long, but the market normally, you hit that and you make a retracement here the way you did here. It can take some time. Let's see what it does. But the trend is up. You know that you're getting your reversal in the VIX if what happens to the downside. What would happen? Do you have an outside day? Up today. Take out the low of an outside day up tomorrow or Monday, and the odds favor you're going right into those moving averages. Got it? That's the way that I do it as a chartist. Doesn't mean I'm right, but that's the way that I look at it. Okay, I don't want you to be short bonds now. Take a look. On the close today, what happened? You kept embedded. Uh-oh. Now, it's only intraday because the evening session began, but you got a 23 reading. If you keep that reading lost, what happens? Probably going back to the 18-day average. I would not tell my clients put out new shorts when you're losing that reading. 10-year note, the same identical thing. Here's the close, and now you've got a reading that's already up to 25. I agree. It can fail, bring the red line back under 20 by the close, and it's still bearish. But I'm not going to be a hero standing in front of it. You'll say, well, it's a bounce. It could be more than that. You lose that momentum, it's a strong chance if you've taken that enhanced Bollinger Band course as to why and where the market's going to go. In the dollar index, the dollar suddenly lifting its head, and it threw out a buy signal basis the close today, basis this pattern. Higher lows, higher highs, you're over the 18-day average. And by the way, momentum pointing to the upside. If it wants to run, and I don't know if it's going to run, then one possible set of numbers, there's window envelopes, but a set of numbers could reach to 96.64. What would throw this out? Taking out today's low of 95.40 and a half. Then I'm not correct in this analysis that I have. The euro is throwing out the opposite. It's throwing out sell signals. It is oversold. Oversold is very different than this dollar, which is just pointing up. So that's a problem. And 40% of the weighting of the dollar index is the eurocurrency. But you're in a downtrend, oversold, but if it wants to break down, that's what you look at, outside day. So you know that if you took out today's high on Friday or Monday, you've created a bear trap in the market. You might be going the other way in it. Lots of interesting things going on in these charts. I've been looking, as you know, for the British pound to retreat because it lost the embedded reading back to the 18 and the 100-day averages. I'll stay with what I teach. Bitcoin still, to me, bearish but oversold. Definitely in the oversold camp. Lower highs, lower lows. I don't tell traders to enter oversold markets. Brent versus WTI crude, well, 264. Market challenged a new low in it the other day. Now it's getting a bounce away from that. And you got to pay attention here. Are you going to lose the embedded reading? So far, no. So until you lose it, breaks like this, I think the pros are buying. When I come over to WTI, until that's lost, breaks like this, I think the pros are buying. In the heating oil, breaks like this, I wish I could do a recording. Breaks like this, they are buying. Get a 79 reading in all three of these markets, actually under 79, 78, 99 or lower. I think the pros come out of the market and they'll say, okay, momentum seems to be lost for a moment. Why are we breaking and all that? Could be that every announcer on TV is talking $100 crude oil, that's where we're going, that's where we're going. These people know nothing. They know as much as your kid. It's easy to say as it's going up, it's going higher. It's easy to say as it's going down, it's going lower. Okay, so we'll see what that wants to do through there. Natural gas, breakdown in natural gas, a big breakdown in natural gas. But let me think, as cold as it is, we're going into February. So winter demand, I know you're going to find this so hard to believe because it's the futures market. That's why it's called the futures. You're anticipating. It's going to dissipate. Coming down. Got too high against the upper Bollinger Band. But what the market really did is it expanded its trading range out. It was very narrow here, had a nice run. As a technician, I wish it would have gone to the 100-day average. Would have been just so pretty to teach off of. But it did its job. Got overbought, never embedded, and now the market's correcting. That's the way I look at it. So, a couple of things. Remember, if you want to see my dollar report, click up here, move your cursor. You'll see an icon come out. It goes off our website at 3:21 p.m. I looked it up today, tomorrow afternoon. You won't see it again. And remember, if you're interested, morning futures video, what better way for you to step into these markets? And each morning, what are you able to do? You join me in terms of you wake up, what's Ira thinking of charts? And we put a scroll so that when you're looking at the video on our website, and it's so simple, we send you a link and you just click it takes you right there. As you drag it, it'll tell you you're in the metal market area, I'm in the interest rate area. You don't have to worry where you're at. It takes you right there right away. What a way to start the day. You get 24 of those a month. They're about 18 minutes long, each one. On the weekend, you get for 4 weeks, each one will be weekend ones. And I cover all the weekend charts for the longer term trade, and I mix the news together with it each day. Give it a try. I don't think $7.95 is going to break the bank. And you can quit right online. Everything you manage is now online in our members login area, www.iraepstein.com. Market research when you're on the website. Take care.